Hello and welcome everyone to today's Gold and Silver Club, presenting the Commodities Corner, presented of course by myself, Phil Carr, at the Gold and Silver Club. Today's live session will be covering a review of the commodities markets this week. We'll look at the top trades of the week. We'll cover live technical analysis and trading. We shall be identifying highly profitable trade setups, and of course we'll look at the week ahead. So the key events looking forward, as well as answering any questions you may have. So first of all, in the news at the moment, well, gold rallied on safe haven demand amid the Malaysian plane crash uncertainty. So yesterday, gold price surged after the Malaysian Airlines passenger jet crashed near the border of Ukraine and Russia yesterday. And we saw gold, a safe haven in times of uncertainty, soaring on reports that the Malaysian airline carrying 295 passengers had been shot down by pro-Moscow rebels in the region. The crash came a day after the US and European Union slapped new and tough sanctions on Russia following the annexation of Crimea in April and ongoing tensions in the rest of Ukraine. The new sanctions are considered to be the largest round of penalties so far. The precious metals also found support on Thursday after Israel announced the start of a ground campaign in Gaza after 10 days of aerial and naval bombardments failed to stop Palestinian rocket attacks. Elsewhere in the markets, precious metal prices were boosted by increased demand in the world's second biggest consumers, China and India. Reports this week highlighted India, which is the world's second largest bullion buyer, speeded up imports in June by 65%, with shipments rising to 3.12 billion, up from 1.89 billion registered in the same month of the previous year. So this news certainly helped drive gold prices higher yesterday after the sharp decline on Wednesday, following comments from the Federal Reserve hinting interest rates could rise sooner than previously expected. So we'll take a look at the technicals very shortly. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I am the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Cowsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationships with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications who have appeared frequently on financial television. So that's some background on the Gold and Silver Club. We'll just quickly take a look at the gold price this morning. We're currently trading at $1,310 an ounce. So we pulled back a bit from the daily highs of yesterday up to 1324. So we're about 140 points off that. We're still holding on to support. We're still above yesterday's, the breakout from Tuesday. So we'll take a look at gold very shortly. Before we do so, we'll of course take a look at the top trades of the week using the Gold and Silver Club's signature trading strategies. So first of all, we of course had a lovely breakout on gold yesterday. We broke above the 1304 level. So very simply a nice rise trade. Once we got above 1304, we took that for a breakout yesterday, and we got a really nice surge all the way up to 1324. So we had a lovely buy opportunity yesterday on gold. Natural gas, this week we broke down in price. We had the natural gas storage inventories just yesterday, which did help further to push the price of natural gas lower, and we had a sell entry at 4.080, and that delivered perfectly as well. And we had WTI crude oil, a rise trade for the price to be higher, with a buy entry there at 101.05. Okay, so we had a lovely breakout on crude oil as well this week. Both on Brent and WTI have given lovely breakouts to the upside. Okay, so we will be having a look today at the rise and fall type of trades on binary.com. So with this, we'll be selecting rises to win the payout if the market exit price is strictly higher than the entry price, and you select falls, you win the payout if the market exit price is strictly lower than the entry price. Okay, so very straightforward way for us to trade the markets. If you just bear with me, I'm going to just get my screen sharing organized for you. Okay, super. So you should be able to see the wheat market at the moment. I was hoping just to bring up the screenshot as well from Tuesday's trades that we took as well on Commodities Corner. All three of those did, in fact, win as well. So let me see. I don't think I'm going to be able to find those real time at the moment whilst I'm talking to you. But if you were on Tuesday's Commodities Corner, well done. If you took some of the trades that we also took on binary.com, we won all 3 out of 3 of those trades. So first of all, we want to take a look at the wheat market at the moment. So wheat is looking very bearish today. Now, you'll find yesterday we did, with Russia and Ukraine being the largest exporters of corn and wheat, we did see a big safe haven move to the upside yesterday, particularly on gold, which followed through with wheat and corn as well. So we've got a very strong downward trending channel, which we've had on wheat really for the past 3 weeks or so. Well, actually past 3 weeks, it's picked up momentum, but we've been in this downward trending channel going all the way back to May here as well. So wheat is looking good for a sell short at the moment. We've come down, we tested a key level of resistance yesterday, but a very clear trend line you can draw on the chart here as well. Just going to the 4 hour, you can see a very clear trend channel here as well. And we're just seeing that break down this morning and into the US session. So I'm looking for a sell short on wheat. I just want to see the market come back down to the lower end of the trend channel here. So very simply, I am going to go for a sell short, going to go to commodities, and actually we'll go to sectors. I'm going to go to the agricultural sector, and we are looking for a sell short on wheat. Okay, the duration on this, we want that to be circa 3 to 4 hours. Okay, perfect. We can go out 4 hours. So very simply, all I need the price to do here is close lower than 548.00 on the wheat market at the moment. You can see, again, just going back to yesterday's move, we've been in a very strong downward trend with wheat. Yesterday, we got a sudden spike on the news which came through yesterday on the plane crash. And you can see this spike all the way to the upside. We've just come up to the upper end of the resistance channel. What I'm looking at here is just for further downside. Again, come down to take out the 520 support zone. So very simply, looking for a sell short trade, very straightforward trade, 81% payout on that, and looking for $1,103 deposit for a 4 hour trade for the price to finish lower. So I will take that on the wheat market. Okay, so that has been done. Moving across to corn, I also like corn as well. Corn, very similar situation. Yesterday, corn had this big spike to the upside very quickly, came back down again, gave back those gains, big inverse hammer here just on the 4 hour, and corn, very strong downward trending channel that we've had over the last couple of months. We are still selling off quite hard with corn. You can see a major level to take out here is 370.50. For further downside, we broke major support going back a couple of weeks ago at the 406 level. We broke again 387 last week. And I'm looking just to take advantage of the retracement that we got yesterday on corn as well. So I'm going to go for a sell short here with the corn market too. So just get the best price and go for slightly better entry there than wheat. So I'll go for 81% payout, so $1,655 for a $3,000 payout. Just get the best price, and I'll purchase that as well for a sell short. Okay, so corn and wheat taken sell short. So those were the first two I just wanted to get out of the way whilst they haven't moved too much. And then we'll take a look at the other markets as well. So natural gas sold off in style yesterday. We broke through major support at the 4.080 level. That had been a major support level all week. And we really had a nice setup for that inverse hammer right at support. And we broke through that yesterday during the morning, just before natural gas inventories in the afternoon, and the inventories, the storage inventories were very bearish for natural gas, and they've just helped to really push nat gas all the way down to major support. Now, we have interestingly come down to a support zone where we found this price to be rejected on roughly about the 15th of January earlier on this year. So this is a key level we're at the moment at 3.955. What I'd like to see here is whether we will get a further breakdown as we go into next week, or whether at this point we are going to see nat gas do a bit of a retracement and come back up to the upside. It's definitely an event area at the moment for natural gas. I'd like to see whether we are going to hold support or whether we're going to break it. So for me, we've had a decent trade on this at the moment, and I'm looking for more trade opportunities as we go into next week on natural gas. So we'll see which way that forms and breaks out into next week. Certainly we'll cover that on Tuesday's Commodities Corner. Looking across at light sweet crude oil, well, light sweet crude oil did come down to a major support zone earlier on this week, which we discussed on Tuesday. It found support there at the 99 level. You can actually see here this major level of support was also held in February, May and April. So we definitely had a very important level of support here. The market has actually rallied over 300 points since it found support at 99 levels. So it just shows you how important these capitulations are. I had a big hammer on the daily here, then a very strong reversal to the upside. So at the moment, I want to wait for the next entry point here. We've caught some nice breakouts here to the upside. You can see at the moment getting a bit of a retracement on the daily at the moment for oil. And I'd like to see how this sets up as we go into next week. So for me, the oil trade has already occurred here earlier on in the week, which we caught. Brent crude oil, similar situation, hasn't done as well as WTI, but it did come down to a major support zone where you've obviously seen profit taking, and also longer term investment type traders have got in at this key level, the 105.50 level, for a decent long. It hasn't moved as much as WTI. I want to see how this is going to close the week as well as we go into the Friday close, and I want to see how the US session deals with oil. But for me, a lot of the action at the moment will be on the soft today. Wheat, corn, certainly we'll take a look at the metals here as well. So as discussed, we've got a nice sell short on wheat, sell short on corn. The US dollar index, I'm watching this closely. I want to see if we've come up to the upper end of this trend channel, and I would like to see whether 80.65 is going to provide key resistance here for the US dollar index. If so, we may well see a sell-off and come back down to the lower end of this trend channel, and that would definitely be supportive for the gold price. So very keen to see if the US dollar index will either break above the 80.60 level, or whether the US dollar will in actual fact break down and come down below the 80.50 level, in which case I would see that as being supportive for gold, and we should get more upside in gold. Let's just take a look at gold. So gold, we got that nice spike yesterday, came up to 1324. This was the 200-point spike. We're getting some quick profit taking today, a little bit similar to corn and wheat in that respect. They triggered very quickly on the longs. They had a big spike to the upside, and then they retraced quite a lot. On gold here, we're still holding within this consolidation zone. There is a major support around the 1291 level. We've got some key moving averages and indicators which were all giving us a buy signal around those levels, which got confirmed, and a break above 1304. So at the moment, I'd like to see how gold is going to fare today, whether we can get above yesterday's highs, above 1324, or whether we'll break or test 1304. We're getting a bit of a pullback at the moment on the daily, bit of indecision here. So the US session should give us more direction. I don't really see a trade set up right now on gold, but I think certainly as we go into next week, we could we could end up with a fairly decent setup, particularly if you look at the weekly. We've found support at a key support zone at 1291. So if we can get back above 1325 as we go into next week, we should get a pretty big breakout to the upside. And that's what we'll be looking for gold. If we have a look at silver as well, silver, very similar situation yesterday, really. Silver also spiked to the upside, came back into the consolidation zone. Silver still hasn't given back its gains from the FOMC announcement about 2.5-3 weeks ago now. You can see the big FOMC move. We had a $1 move, came down, found support again at 20.55 here. And we've come back up to 21.22. So we've got this whole area of consolidation at the moment on silver, which we do need to get some sort of resolution. I would still have a preference for a buy here. We still are holding on to major support. You can see this consolidation zone between 20.55 and 22 level really needs a resolution soon. So are we either going to break 20.55 and come down for a 50-point move down to the $20 an ounce, or can we get a decent breakout, get back above 21.22 and get above the 21.57 level, where we will start seeing a lot of momentum pick up to the upside. So for me, silver, there's no trade set up on this right yet. However, we are anticipating a breakout very soon, as we come into August. Also, looking at the other metals here, if we look at copper, copper's actually been the weakest of the metals this week. We've come up to the upper end of this trend channel. Copper is retracing at the moment. It's actually testing around a key moving average just this morning, and previous resistance here at 3.1961 seems to be now becoming some potential support here. I want to see how copper closes today, and we've had some nice breakouts. Palladium broke out to 13-year highs just yesterday, and now previous resistance seems to be becoming support. So Palladium, there's been some great trades on that over the last week. Platinum as well did get a nice surge alongside gold and silver yesterday, and then it's just retracing back to previous support here around the 1487 level. So again, for me, I'm very curious to see how the metals are going to close this week. We've had some good trades on the metals over, certainly yesterday, the breakouts that we got. So for me, the ones to watch for today will definitely be wheat, corn. I'll be watching the US dollar index, and I want to see how gold fares today, particularly if we can get back above the 13.25 level. And then we are boding very well for setups, particularly with the energies as we go into Tuesday's Commodities Corner next week. Okay, so we'll take a look at the major announcements that we've got as we go into next week as well. Readings should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. That is at Monday, 1:30 p.m. BST, 8:30 a.m. Eastern Time. We then have Tuesday, the 22nd of July at 1:30 p.m. BST, 8:30 a.m. Eastern Time. We have the US core CPI. So the core consumer price index, CPI, measures the changes in the price of goods and services, excluding food and energy. The CPI measures price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Tuesday, the 22nd of July at 3 p.m. BST, 10 a.m. Eastern Time, we have the US existing home sales. So that report measures the change in the annualized number of existing residential buildings that were sold during the previous month. That report does help to gauge the strength of the US housing market, and it's a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And then later in the week, of course, on Wednesday, we have US crude oil inventories at 3:30 p.m. BST, 10:30 a.m. Eastern Time. That data reports a number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Thursday, the 24th of July at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US initial jobless claim. So that data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It's usually the earliest US economic data, and week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And then Thursday, the 24th of July, we've of course got the US natural gas storage. It's at 3:30 p.m. BST, 10:30 a.m. Eastern Time. The Energy Information Administration, the EIA natural gas storage report, they measured the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. Certainly this week, the natural gas storage inventories helped our sell short trade, and we came out of that with 120 points. So it can be a very volatile and very highly lucrative trading opportunity on natural gas storage. Okay, so with that, these are the 6 major announcements that you need to take note of into next week. So again, just a quick recap. Monday, Chicago Fed national activity. Tuesday, US core CPI. Tuesday, US existing home sales. On Wednesday, crude oil inventories. On Thursday, US initial jobless claims. And Thursday, US natural gas storage. And of course, for those of you who would like to find out more about the Gold and Silver Club live trading room program and daily trade signals, you can find out more about that very simply at www.jointhegoldandsilverclub.com. You can either contact us via email or on the website, or just get in touch via one of our international offices, either at London, New York, Johannesburg, Budapest, or Hong Kong. I'll leave the numbers on the screen for you there. And also make sure you subscribe to our newsletter. You'll get free weekly reports on the precious metals, energies, live market analysis, and prices. So that is it for today's Commodities Corner, guys. So we'll definitely catch those of you who can make it for Tuesday's Commodities Corner at 12:30 p.m. BST. Good luck with today's trading. Have a great weekend, and we'll see you all on the next one. Okay, take care, everyone, and thanks again to binary.com and the team for putting on today's webinar. Cheers, guys. Bye-bye.